welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade as well. We'll also get you expert views to find out how should you be looking at the auto sector as a whole amidst the news flow coming in from US as the strike continues against three OEMs or the original equipment manufacturers, and could that have an impact on the Indian auto ancillary pack? We'll get you all of that, but first up, a quick check on how the markets are doing at this point in time. Not a great day for the Indian markets. You can see a % loss for both the benchmarks, the Nifty 50 and the Sensex as well. 19,947, the current levels for the Nifty, 186 points lower in trade. The Sensex also down by about 657 odd points at this point at 66,936, the current level. Below the surface again, when we look at the broader markets, the mid and the small cap 100 stocks and the stocks from those baskets, you can again see some pressure coming in on those as well. About a % loss for the small cap 100 index, but when we talk about the mid caps, they are still slightly better off, about flattish to a negative bias is what you can see. The mid cap 100 index really trading with at 40,617 odd levels. Now when we talk about the sectoral moves as well, largely it's a sea of the red. You can actually see autos, banks, financials, realty, metals, and even the healthcare and FMCG, oil and gas space, everything looks down. The only bright spot currently is perhaps the consumer durable space that's slightly picking up pace and an otherwise muted set in today's trading session. You can see some move coming in on the power based stocks, Coal India, Power Grid, NTPC. These are the stocks that are still comparatively looking good. Some of the auto majors, Bajaj Auto, Tata Motors holding up, Bajaj Finance, Axis Bank. From the Pharma pack, Sun Pharma and Cipla also doing better, but it's the Nifty 500 where still some better action can be seen, led by Blue Star Power Industries, Craftsman, automakers, Graphite India. These are the stocks that are still on the move right now. But let's welcome our guest, Mr. Hemang Jani, right here, market expert with us. Welcome to the show, Hemang, and thank you so much for taking the time out. First up, your view on the markets overall, the downtick that you're seeing today, that follows the sluggish move that we'd seen on Monday as well. Do you see this as a prolonged indication of consolidation continuing after the run-up we've already seen?
Yeah, good afternoon. So, after a long time, we are seeing, some correction coming into our markets, and I think it's largely driven by what's really happening in US markets, where we are seeing a bit of a cool off. An important event lined up today in terms of the Fed meeting, and what sort of interest rates one can really expect basis that, and also the fact that we have seen a big run up across the broader market and we've outperformed the global market. So I think there is a case for some sort of a cool off. There is a case for some sort of a consolidation, but I don't think one should really worry too much because I think the earnings picture continues to look good, and I don't see much of a challenge on the broader positioning of the market.
Okay, let me just discuss with you the matter at hand, and that is with regards to the auto space right now. The automotive component manufacturing hubs in India are somehow feeling the heat of the strike call by the American Automotive Workers Union, that is United Auto Workers or UAW, against the big three, that is Ford, General Motors and Stellantis in distant Detroit. Now, this is the first time UAW has launched a simultaneous strike against all three automakers, and these strikes have led factory shutdowns in Michigan, in Ohio, in Missouri as well. Remember, for all our viewers, around a third of India's automotive component exports is to North America, and now that there is this stand-up strike going on, there is fear that could this really lead to a major impact coming in on the Indian automakers as well. Your view, Mr. Jani, how do you see this news flow from the last 3-4 odd trading sessions or days we've been hearing about this news? Some of the auto ancillary makers have already come out with their statements that if this strike prolongs, there could be an impact. How do you really see it?
So yes, there could be some impact on the auto ancillary companies because, as you said, North America accounts for about 30% of the India's auto ancillary export for FY23. And some of the prominent companies like Sona, Comstar, Sundaram, Bharat Forge, Motherson, these companies have exposure to some of these automakers. So if you have a case where the strike prolongs and there is some sort of a cut down of the production, then surely then that can have some impact on some of these ancillary companies. But I think it's too early to really take a call because things are not very clear. But I think in the intervening period, you might see a bit of a cool off across these names.
Okay, let's also read for all our viewers two statements that have come in. Suprajeet Engineering, which is again a listed company, has said that a prolonged strike by the United Auto Workers Union in the US could affect operations at its plants in Matamoros, Mexico, and this strike, which has come into force, is believed to have an impact in case this really leads to a longer than expected strike. It has already entered the fifth day. The union has warned that it will intensify the strike if no resolution takes place by Friday. So things are, you can see the stock slightly down in trade about 0.6 odd percent. Sona BLW at the same time has said that workers at 3 OEM clients in US have gone on strike. And currently there is minimal impact on the sales due to the strikes. However, it could be higher if the strike persists for long. So these are the statements that are coming about already. How do you see this? How much longer can Indian automakers still sustain without any substantial impact if this strike continues, and by when does it start to become a problem?
So I think at the moment, based on whatever information and facts are available, it does not look like there's going to be a meaningful impact. Yes, of course, some companies wherever they have come out with a clarification, like Suprajeet, in this case, you said there could be some impact. But I think for Sona Comstar, about 45% of the revenue is coming from the US, and this certainly could be risk for them if the strike really continues a bit longer, and more so if you have any meaningful production cuts announced by the OEM companies out of US. So let's watch out for the developments over the next few days. If there's a resolution, I don't foresee any major negative impact on some of these companies. So I think we should just wait and watch, and basis the actual outcome only, we should take our action.
Okay. Of course, the auto industry has gone through a very long and tough period, 3 years of COVID, and of course, followed with that the semiconductor supply chain issues as well. Things have just started to improve for the Indian auto makers, OEMs, and the auto part companies as well. If this strike really continues, could this mean an added on disadvantage to the already weakened supply chain that we've seen during COVID?
I think for some of these companies, if you leave aside the ancillary companies, the OEM companies based out of India, I don't see any issue because absolutely no issues in terms of their growth. Festive season is panning out, and hopefully numbers will be very strong. So for names like Maruti, Mahindra, Ashok Leyland, and so on and so forth, I don't foresee any issue. But yes, the ancillary companies will have to watch out for that because a large part of their revenue and export comes from the US market, some of the European Union, etc. So that is where we have to be a little careful at this point.
Okay. Any particular stocks from the auto and the auto ancillary basket that you're keeping on your watch list that, despite this kind of a trouble, are still in a better footing that investors can continue to hold on to or maybe increase their positions?
Surely, we should look at Bharat Forge. I think, apart from the auto ancillary, the company also has built a defense-based portfolio and many more plans. So I think this is one stock where if you see any knee-jerk reaction because of this development, if you see 3 to 5% kind of a cut, Bharat Forge could be one stock that one should really keep on radar and look to add during the volatility.
Okay, understood that. Apart from the auto space, which is the other space that you're watching out for, sir, right now, and where do you think that investors can continue to look for value?
So, one spot where we really continue to have positive, rub off is the pharma space. Apart from the M&A, like where Cipla, there is a possibility that Torrent Pharma could put in a bid. The US generic, the news coming out from that space continues to be good in terms of the approvals, in terms of the pricing pressure completely has eased off. So I think Dr. Reddy, Cipla, even some of the API companies like Laurus Labs, I think we should really have positive impact because of what's happening in the US markets.
Okay, understood that as well. So these are the pockets that you're bullish on. Apart from this, we've also seen a new listing today. RR Kabil shares debuted with a 14% premium over the issue price at 1,035. Now, what's also important for investors to understand is that this is the first company to have made listing in T+2, that is 2 days after the IPO closed, and this is as a debuting after the SEBI had changed rules for the listing norms as well. Of course, we've seen a whole lot of momentum in the recent past with respect to the wires and the cable space, the demand surge that they've seen, the improvement in the earnings that they've seen, the order inflows that they've been getting, especially the likes of Havells and Polycab. These stocks have performed well in the recent past. Your thoughts as this new company comes in, how should investors be really looking at this?
So it's been a great listing for our Kabel, and our take is that given the positioning that this company has in the wire and cable segment, and the kind of brand and the wide portfolio with capacity expansion plans, this looks like a great story for next couple of years. Even on the uh, FMEG portfolio, it plans to grow inorganically, and the overall growth that we're looking at in terms of top line for next 2 years would be about 21%, and bottom line be about 40% or thereabouts. So a great opportunity for investors to look out, for investment in such companies. Of course, one will have to take a 1 or 2 year kind of a view, but this can give a very solid 20-25% kind of a CAGR growth over the next 2 years.
All right. Well, okay. Many thanks, Ms. Jani, for being with us on the show and discussing all these pockets and where are the opportunities there were emerging for the equity investors in the current market setup as well. Great to speak to you always and understanding the market insights from you. Looking back at the markets, 19,952, the current level for the Nifty, 178 points down, 635 points lower for the Sensex right now at 66,961. So a bit of a down day for sure. The bulls taking a rest, but we'll see and continue to track the market momentum for you to continue to understand where exactly should you be really looking in for value. Many thanks for being with us on this special edition. Which are the top stocks that you're watching out for? What is on your attention today?
Well, Sakshi, so